Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Rare earths producer Lynas Corp Limited said on Wednesday output nearly halved in the fourth quarter, hit by coronavirus-triggered halts at its Malaysian processing plant and flagship mine in Australia. The pandemic also hit demand for rare earths, a group of 17 minerals used in everything from ventilators to iPhones to military weapons, the world's largest producer of rare earths outside China said. Production at the company's Mount Weld mine in Western Australia restarted in mid-June after a 2-month hiatus, while the Malaysian plant reopened in early May, having been shuttered for more than a month under government orders. Despite the restart, Lynas said its Malaysian plant was operating at only 75% capacity and production at Mount Weld was aligned to the rates in the Southeast Asia nation.
We will now look at the top news in the agricultural sector.
Thailand's Rice Exporters Association has slashed its forecast for 2020 exports to 6.5 million tons, the lowest volume in 2 decades, owing to drought and a strong baht currency, its executives said on Wednesday. The industry group's latest forecast for Thailand, the world's second-largest rice exporter last year, is lower than its previous expectation of a 7-year low of 7.5 million tons for 2020. The association attributed that to a persistently strong baht compared to other currencies and drought cutting Thai rice output by 5 million tons this production season, making prices higher and uncompetitive. From January to June, Thailand exported 3.14 million tons of rice, about a third less than the same period last year, the association's data showed, less than India's 4.53 million tons and the 4.04 million tons shipped by Vietnam.
Next we have agricultural price news.
Chicago soybeans futures bounced back on Wednesday, rising for 6 out of 7 sessions while corn gained ground on strong Chinese demand. Wheat gained for a second consecutive session. The Chicago Board of Trade most active soybean contract added 0.5% to $8.97 minus 1/2 a bushel, as of 0313 GMT. Corn rose 0.5% to $3.24 minus 1/2 a bushel and wheat gained 0.4% to $5.29 minus 3/4 a bushel. Since July 10, the U.S. Department of Agriculture has reported China bought 3.259 million tons of U.S. corn, along with 1.298 million tons of soybeans and 320,000 tons of hard wheat.
Coffee futures closed sharply higher on Tuesday, boosted by broad-based gains in commodity and equity markets linked to positive news about coronavirus vaccine trials and a European Union stimulus deal. The vaccine optimism also boosted Brazil's real currency, reducing dollar-based prices in local currency terms in the top exporter of sugar and coffee and potentially slowing producer sales of the two commodities. October raw sugar settled down 0.05 cent, or 0.4%, at 11.67 cents per pound, after gaining as much as 1.5% earlier in the session. December London cocoa settled down 18 pounds, or 1.1%, at £1,551 per tonne. September Arabica coffee settled up 2 cents, or 2.0%, at $1.0175 per pound.
We will now take a look at energy price moves.
Oil prices fell on Wednesday as industry data showed a bigger than expected inventory build in the United States, where climbing coronavirus cases may further dent fuel demand in the world's biggest oil consumer. In his first press briefing in months on the pandemic, U.S. President Donald Trump said the outbreak would probably get worse before it gets better, one of his first recent acknowledgments of the spread of the problem. Industry group American Petroleum Institute reported U.S. crude inventories rose last week by 7.5 million barrels, against expectations for a draw of 2.1 million barrels. Brent crude fell 35 cents, or 0.8%, to $43.97 a barrel by 0541 GMT, and U.S. West Texas Intermediate crude dropped 39 cents, or 0.9%, to $41.53.
U.S. natural gas futures rose 2% on Tuesday as power generators burned record amounts of gas this week to keep air conditioners humming during the hottest part of a heat wave blanketing much of the country. That increase, however, came after prices fell over 4% to a 3-week low on Monday on forecasts for less hot weather next week. Front-month gas futures rose 3.4 cents, or 2.1%, to settle at $1.675 per million British thermal units. On Monday, the contract closed at its lowest since June 26. As the weather turns hotter, data provider Refinitiv forecast U.S. demand, including exports, will rise from 92.3 billion cubic feet per day this week to 93.6 BCFD next week. The power industry consumed more than half of that gas, gobbling up a one-day record of 47.5 BCFD on Monday.
Moving on to metal price moves.
Copper prices rose on Wednesday as a weaker U.S. dollar made the metal more attractive, and as the European Union's massive stimulus program lifted market sentiment. 3-month copper on the London Metal Exchange was up 0.7% at $6,581.50 a ton by 0445 GMT, while the most traded August copper contract on the Shanghai Futures Exchange advanced 1.4% to 52,600 yuan or $7,544.36 a ton. LME aluminium rose 0.1% to $1,698.50 a ton. Nickel advanced 0.5% to $13,530 a ton while SHFE aluminium advanced 1.3% to 14,425 yuan a ton and SHFE nickel climbed 1.3% to 107,330 yuan a ton.
Benchmark iron ore futures in China rose for a second straight session on Wednesday, boosted by expectations of firm demand for the steelmaking ingredient as the rainy season in eastern China comes to an end. The most actively traded iron ore futures on the Dalian Commodity Exchange, for September delivery, gained as much as 3.6% to 862 yuan or $123.67 per ton. It was up 2.2% at 851 yuan, as of 0330 GMT. Steel prices on the Shanghai Futures Exchange also gained, with construction rebar up 1.7% at 3,798 yuan per ton, and hot rolled coils 1.4% higher at 3,817 yuan per ton.
Finally, we have the most recent news on the financial market.
The dollar nursed losses against most currencies on Wednesday, undermined by concern that Republicans and Democrats are struggling to reach consensus on the next round of U.S. economic stimulus measures. The euro traded near its strongest level in more than a year after European leaders agreed a stimulus plan to fuel recovery from the economic damage caused by the COVID-19 pandemic. Appetite for riskier assets has improved greatly this week as progress in developing vaccines for the novel coronavirus reduced the U.S. dollar's safe harbor appeal. Investors also expect a massive amount of fiscal spending to support growth in major economies but could easily be disappointed if any stimulus falls short of expectations. Against the British pound, the dollar traded at $1.2719, close to a 6-week low. The dollar fell to 0.9315 Swiss franc to reach the lowest since March. The euro briefly touched the highest since January 10 before settling at $1.1538. Against the pound, the euro was little changed at 90.70 pence. The dollar was steady at 106 yen and 85 sen. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.